webinar. If you're watching the recorded version, it was held live on Wednesday, April the 11th at 12:30 in the afternoon. So this is a webinar we do every week on a Wednesday lunchtime. I just put the risk warning up, and it's a market outlook webinar. So we look at the major markets: pound, euro, some stock market indices, gold, and oil. But we'll also take a look at a trading strategy every week. We look at something different. And this week, I think we'll look at trend reversals, because I think it's a really interesting approach. You know, we all know that markets trend, but trends don't go on forever. And trend reversals can give us an opportunity to get in at with a good risk reward, a trade that's good in risk reward. And I did one last week on the pound, buying the pound. I think it was on Thursday or maybe Wednesday afternoon. That's just been stopped out today. So I'll talk through that and the reasons behind that. But I think the risk warning has been up there for long enough. So let's get cracking. So here's the pound. I think it's interesting at the moment. Anyway, let's just go back to the bigger picture before we talk a bit more about specifics. This is pound US dollar, and as I've been saying for a while now, really all through last year, that trend has been up. So if we pick up maybe off these lows from March last year, if I could do it properly, hang on a second. So pick up on the March low. Doesn't want to do it today. What's going on here? Okay, I don't know why it doesn't want to do that. Let's have a look. What have I done? Can I draw a freehand? There we go. Let's draw a freehand line. Okay. Well, this is going to be an interesting webinar, isn't it? If I can't draw any lines, let's pick up on that one there. Oh, okay. I can draw it up there. Bear with me. So if I pick it from down here, there we go. That's it. So that's what we're talking about. Ignore that. Ignore that top trend. Remove. There we go. So the trend that we've been in now since last year, it's still going. You know, so I think the expectation would be for the pound to push higher. I think the next logical target is for a run back up to the pre-Brexit range, sort of above 146, or the pre-referendum range above 146, sort of 146 to 150. And it only really changes, you know, it's the same level we've been talking about for ages now. I think it only really changes if we slip below these old lows around about 137. Saying all that, you know, it's been a bit trapped, really, like the euro has against the dollar as well, for the last 2.5 months. So we haven't seen a fresh high for this move since the end of January. So let's see. But I think that would be the trigger. If we can break 144, then I think we start to move into this new range, you know, possibly targeting 150 ultimately. So that's the big picture view. Any weakness, any major weakness looks like a buying opportunity. Only if 137 gets broken does it start to look as if that trend's coming to an end. Saying all that, you know, we've had a good run these last 4 days, and it's starting to weaken again. It's just today anyway. Just today we're seeing a bit of nerves coming in. Later on today, tonight at 7 o'clock, we've got the latest latest minutes from the Federal Reserve, the US central bank. That's 7 o'clock UK time. So the minutes from their last meeting, and that can normally be guaranteed to inject a fair bit of volatility across markets. So maybe in the short term, you know, we'll see the market start to roll over up here. But let's take a look on the hourlies to see what it looks like. Here we go. So we're back up here again. You know, we're back up at these old levels, and we are a bit, I suppose, just sort of chopping around really. But there's the big level, 142.50, near enough is the hurdle from the end of March. But if I talk about the trade I did, I was watching this it was really dull last week. It was an odd week last week because we had Easter Monday. So they were, you know, so Europe was closed, but the markets were moving around. There were still opportunities if you wanted to be really nimble last week. You know, we saw it on quite a few days. I think is it Easter Monday that day? Maybe. Coming back down to the 140 level. Look how many days it comes back to 140. Okay, we don't see a massive rally. We see maybe an 60 to 80 point move off that level. And then we just kept coming down and banging off the level. So it was definitely a buying opportunity. But where I was watching it here and really looking at the trend. And I thought, well, the trend from these highs, we're talking about our trend reversal thing now. You know, the trend from these highs had been over. You know, so we've got downtrend, 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 market reverses, or market breaks out of that trend. But just because a market breaks out of a trend, and we'll look at maybe some bigger examples as we go through today, just because a market breaks out of a trend doesn't necessarily mean that bang, it's going to go up here. So I think there are a couple of ways of trading this. You know, trading the pullback to here with a stop somewhere below, which was definitely one way of trading it. But if I'd have traded it, I'd have been stopped out first there, because my stop would have been under here somewhere and I'd have been stopped out. But what I thought was interesting last week, and where I did end up buying it, was the move below that low for the week, and then the spike. Was it on the payrolls? I can't even remember. The spike last week on an hourly chart, and I'm a big fan of these false breakouts. So you see the move here, it breaks below the lows after that trend had broken, so we would be expecting it to go up. Breaks down, has a poke through the old support from March 20th, but there's no follow through. Market rallies, comes back, retests and holds. So that's where I ended up buying in. It ended up, to be honest, it ended up being something of a fluky trade in the end, because I bought it with about a 45-point stop loss. And when the market moved 45 points in my favor, I just trailed the stop loss up. And I've only just been stopped out now. When the markets come off, I avoided getting stopped out. But I think watching it, you know, clearly it's my favorite subject. Watching it near big levels, watching how the market reacts near big levels can be really interesting. You know, so if we look at the trends now, if we picked up on the trend over the last couple of days, you know, to see, well, where's the opportunity now? So for me, you know, I think the risk is that maybe if our trend looks something like that, because we are back up to these old highs, 142.45, the risk is that maybe the market runs out of steam up here. And even as we speak, we are breaking through that trend line that's been in place for the last couple of days. So since the morning of Monday, since Monday morning, that's been our trend for this week. So I think it's interesting. So there's a trend reversal potentially going on. But I wouldn't be selling it here. I think, you know, just because, I think, like I said back here, just because the trend line breaks doesn't mean that suddenly we're going to go bang all the way down here. I think it's interesting to watch how it reacts the next couple of days. You know, do we get a bit of a dibble back up to here, then weakness? Because for me, the trade here, if we're going to go short, the trade is to have the stop above these highs. You know, because by definition, for me, if those highs get broken, I think the risk is it's going to push higher again. So I think there is definitely an opportunity here in pound US dollar, because it's starting to lose this trend. But let's just be a little bit patient. Okay, let's see what happens. We've got this announcement tonight at 7 o'clock anyway. These are Federal Reserve minutes. Let's see what happens there. And maybe we get a bit of volatility up here and a failure. Okay, so for me, I'd rather sell a rally that weakens rather than sell down here with like an 80-point stop, 80, 90-point stop, in the hope it's the start of a bigger move down. You know, trends take a while normally to turn around. You know, we don't see the market suddenly fall off a cliff just because the trend line's broken. So let's see what happens. So I think that's an interesting one to watch. So the big picture view for the pound is still very much the same. The trend from last year is still up, so further pound recovery looks on the cards, but in the short term, maybe it's pushed far enough for now. So I think it's an interesting one to watch. Let's take a look at the euro. I think we're going to see similar sort of stuff. I mean, the euro, like the pound, actually, here's a good example of a trend reversal. We'll come back to that in a minute. The euro, like the pound, has been dull. The euro has been duller than the pound, actually, in the last 3 months. So we had these highs back in January, again, the 25th of Jan. So the highs above 125. It had a brief look in the middle of Feb. But since then, this is proving to be a real barrier. But like the pound, you know, the trend for the euro is still just about, I think, just about up. There we go. So we had the test of the trend line a week ago. So it has been pretty textbook so far. Comes back, brushes the trend line, and we've seen a good rally off that on the daily chart. But looking at the bigger picture, clearly we got a problem up here. At 125.38 was that high. It did trade a bit higher, traded up there. So let's say 125.50 on the upside, but the big level on the downside, and it's a really big level, this 121.50. So we're trapped in this sideways range. Clearly, you know, any weakness towards 122 looks like a buying opportunity. Any strength towards 125 at the moment looks like a selling opportunity. You know, so at the moment we're sort of slap bang in the middle. So I think it's always interesting. I think the more interesting break will be if it loses 121.50, because then I think we could see the start of a more pronounced euro sell-off. You know, but at the moment we just have to assume that level's going to hold, and it's just a little bit boring. But we need to break out through this 125.50 level. I think what is interesting, we'll have a look at that short-term chart in a minute, but if we go back, what is interesting at the moment for the euro, if you take a really big picture view, so going back to 2008, these are the 2008 highs for euro dollar. If you're a sort of a long-term chart geek, it looks like that. Look at that. We are right. We're still within that downtrend. So if you were, you know, if you were taking a 3-year view on euro dollar, you'd be a seller up here, because we're back to a level, and it has been a pretty textbook downtrend. We're back to a level, let's just call it 126, where this trend has continued. You know, and our target would be for a run back to maybe 104. So what's that? A 2,000 point drop from where we are now. It's maybe a bit too early to start calling the top in euro dollar, but I think that is an interesting one. That longer term view on euro dollar, that trend, that 10-year trend is still in place. So we'll always keep an eye on that one, I think. But let's just jump on the hourlies. So in the moment, from the daily chart, it is stuck in the range. You know, it's stuck in the middle of its range. But here's another trend reversal that we had last week, and this, using my approach, I would have missed this, because if I was looking at the trend, maybe from here when it sort of calmed down a bit, you know, we shove our trend line in place. So personally, if I'd have seen the break, I would be waiting for it to come back to here, and would have missed out. Okay, so there's an example. You can't catch them all. I think, particularly if, like me, you're going to wait. You're going to assume that just because the trend line's broken doesn't mean the market's going to go up. In this example, it did. You know, I would have expected a bit more chop, but it has been strong. So there's our hourly chart for the euro. We're in the middle of the recent range. It's a coin flip here. You know, that trend is still up. So I suppose the aggressive trade, if you want to be a buyer, well, clearly the aggressive trade is to be a buyer with a stop loss. I don't know, how tight would you want your stop? The tightest I would want it is probably underneath these lows from yesterday afternoon, 123.20. A more aggressive stop is under this morning's lows at 123.60. But that trend for euro dollar is still chugging away. So maybe we'll have another look at the sort of the mid 124s from here. But I think it's interesting in all sorts of time frames at the moment, euro dollar. Let's look at euro sterling, then we'll look at dollar yen, then we'll look at the stock market indices. So euro sterling, it's a buy. You know, it's the same old that we've been looking at on euro sterling. It feels like forever, but it's not. Big support 87.87 on the euro. We had a bit of a cheeky false break there, 22nd of March. That ended up being a good signal. We've drifted down to it over the last week. So if someone put a gun to my head and say trade euro sterling, it'd be a buyer. I'd be a buyer now at 87.36 with a stop. I would put my stop loss under that false break low, and that false break low is 86.67. So that's about, what's that? 70 points away from where it is now. But assuming that the market is going to rotate its way back up to have a look past 89. So I think it's, you know, it's dull from a trend point of view, euro sterling, but it's there's a definite sideways range that it's stuck in, you know, and it is a tradable sideways range as long as you're not trying to trade it in the middle, as long as we're looking to try and take positions on the extremes in terms of risk reward. I think it's interesting down here. And one final one is dollar yen. I talked about this a bit in recent weeks about the false break and blah, blah, blah. And I do think, even though arguably, so let's have a quick look, the trend is still down. I've done a trade this week over the next month, for the next month, that I think, because I think dollar yen's going to go up, or I don't think it's going to go down much from here. But I think it's interesting because it has been hit so much. This is the daily chart for dollar yen. It's been really weak, and it was really this move here, again, something of a false break. 3rd week of March, breaks below these old lows on one day, and then spends 2 days holding above that previous low, and then starts to rally back up to here. So so it starts rallies, and we've seen something of a recovery. So I think dollar yen is interesting. You know, that clearly the markets move really quickly off 104.80. We're trading 200 points above that, So I think it is an interesting one up here that maybe we're going to see dollar yen after some tough trading. So dollar weakness is what we've seen here in recent, well, since going back to here, isn't it? December 2016. So for the best part of a year and 4 months, we've seen the dollar weak against the yen, but maybe based on, I think, the price action over the last 2 months or so, maybe we're going to start building a base here. There's probably an inverse head and shoulders in there for fans of patterns. I can never spot them, but I think it's interesting. So I think, again, maybe the opportunity here, if we saw a bit of dollar weakness back to these old lows and the buyers come back in, that's maybe a better entry point. So that's it. So FX markets tonight, I think it'd be a quiet afternoon, and then we've got the Federal Reserve minutes coming out tonight, bit of volatility over that, and then back to more normal trades. So let's see what happens. But maybe pound US dollar is the interesting one, because we've had such a run over the last 2 or 3 days, and it's maybe hitting something of a problem area. Let's take a look at the US indices. Lots of volatility this week in the US, not surprisingly, with the China trade war and other political rumblings going on. Clearly we had the situation in Syria, the threat of bombing, all of this stuff happening at the moment. So a very jittery stock market, not surprising. But it is, I think, performing how you'd expect after such a massive bang lower at the end of Jan and into Feb. After having years of a US stock market that just crawled its way higher, and it felt like just incessantly just carried on going up and up and up. This volatility has been a real shock. So there's our weekly chart. If we plonked a trend line on this, when's that? Oh, that's March 2009. Okay, that's the actual financial crisis lows. So there's our big picture trend. Even though we've had a bit of volatility the last couple of months, it hasn't changed the big picture view. We'd need the market to drop 20% from where it is now to threaten that bigger trend. But I think it's interesting, the volatility that we've had. And it's all about the levels. And for me, it's all about the really big level to watch. We're a long way away from it now. But we're 100 points away on the S&P, so about 1,000 Dow points. But the way these markets move, we could always see it quite quickly. Are these old lows, 25-30, the lows from Feb, are the big ones to watch. If they get broken, you'd expect it to kick off more panic and markets to sell off even harder. But so far, whenever we're getting near to these old levels, the buyers are coming back in, as you'd expect. But it's really struggling over the last 2 weeks to make much headway. So we have really big swings during the day. So this is an hourly chart now. So to really, just overnight, I think that the market, the indices have lost 1% in the overnight market. Yesterday, 8 o'clock yesterday, so in the last hour of trading, it touched 26.64, and we're now at 26.30. So we're seeing some really big moves. But for me, it's all about, again, just the big levels. Looking at the previous day's high and low. So the obvious one to watch going into today are the lows from Monday, around about 26.10. Okay, and I think so. There are clearly opportunities because the volatility is so big, but you really need to be disciplined with things like stop losses, because if you're the wrong side of a move, it can go wrong very quickly. And looking at our trend reversal doodah, the move we've seen in the last 5 days or so, does suggest the weakness from those highs is over. We've broken out the trend. We haven't really broken this big level here, though. So I think the jury's maybe still a little bit out, but I'd still be tempted to watch these big levels if I was trading this during the day and watch for the strength to come back in, because we do have a bit of a conflicted trend. But I do think that the story for stock markets is going to be continued massive volatility, but I don't expect to see fresh highs anytime soon, because everybody is so spooked after what happened during February. And clearly, I think the political backdrop at the moment is even more uncertain than it has been for a while. So I think choppy markets, great for trading, not so great for investors. Let's have a look at the quick look at the FTSE, and then we'll have a look at some of the commodity markets. So let's go with the FTSE. I mean, that is a heck of a rally by the FTSE, isn't it? So the FTSE is always an odd one, as I always say, because what's happening with the pound clearly influences the FTSE. So if we see pound strength, because so many FTSE companies derive their earnings from overseas. Pound strength is traditionally bad for the FTSE because it will push their profits down when they convert them into pounds. Excuse me. But we've seen, I think we picked up on this a couple of weeks ago, that even though US stock markets had held above the February low, the FTSE didn't. But it only, again, false break. These false breaks, they're really interesting. You know, where a market breaks a big level that everyone's watching, you'd expect some follow through. When you don't get the follow through, it can be a signal that, okay, well, maybe it's a false break. It's like, I'm trying to think of the Sherlock Holmes story. It's the dog that didn't bark, isn't it? It's that. So the dog that didn't bark, so he knew who it was who was breaking in or something. I'm digging well into my memory there. But basically here, where we have a break below a level, you'd expect the market to sell off. When we don't get that, you know, it can be an opportunity. So what's interesting now is that the FTSE has bounced back, but we're bouncing back, you know, to this old problem area, the old 73.40 highs. So for me, I don't think I'd want to be a buyer up here, but it's interesting to see how does the market react up here. Do we see the sellers come back in like we did in the middle of Feb and right at the end of Feb as well? So 73.40 is a really big level for the FTSE. So I think there's a lot to be watching there. And then we'll wrap things up. We'll take a look at gold and oil. We'll do gold first because it's still a bit boring. It's a bit like the euro at the moment, the price of gold. But again, going back on the whole trend reversal thing, let's just remind ourselves the big picture view of gold. So we saw this massive run up in the 2000s, you know, from 2002, gold was $290 an ounce. And then by 2011, it nearly got as high as $2,000 an ounce. So it was what, $1,800, $1,900 an ounce. Then we saw weakness, and we had years up until 2015, 2016. We had years where the price of gold would make a new low for the down move every year. But what was interesting, I think we talked a bit about this during 2016, I think. What was interesting was it stopped making lows, you know, so it looked like a trend reversal. But because we're looking at quite a big picture view here, weekly candles, you know, it takes a while. So there was our trend break, and I think for me this is the perfect trend reversal setup. So the price of gold has gone from September 2013 above 1400, sells off, sells off, sells off. So by December 15, we're nearly down below 1,000, but not quite, I don't think, down below 1,000. And the market rallies, breaks out the downtrend, does have a bit of a push, but it doesn't necessarily mean that bang, we're going back up to here, up to $1,900 an ounce. And the opportunity was maybe end of December 2016, where the market sells off a bit, comes down, doesn't really get near those old lows, you know, but we see a sell-off after the break, and then since then it has pushed its way higher. So I do, you know, if someone said, where's gold going to be in 5 years' time, I would say it's going to be higher than here, just based on the fact that we have turned around over the last couple of years. But for the year so far, it's been really boring, you know. So we're back on a daily chart now for this year, and it's just been really dull, you know. Whenever we see it down at towards 1,300, the buyers come back in. So I suppose it's a little bit like euro sterling in a way. You know, we've got these extremes. We don't want to be trading it in the middle at 1330, but when we push down to the extremes or rally up to an extreme, that's maybe the opportunity to take the trade. So at the moment, with it having had quite the run over the last 3 days, we're pushing back up to the sort of 1355, 1367 area that has been a problem this year. So it'd be interesting to see if it runs out of steam, and the expectation would be at the moment that it will do. And it was also a problem back in 2016. So really big barriers. You know, I think if we can see gold crack 1375, it starts to look as if, there we go, the next major move higher could be underway. So let's see. You know, it's been dull this year, but I think there are still opportunities out there. And finally, oil. I think oil. Oh, I'm just choking here. I think oil's been an interesting market. I think it's maybe not the most popular market with private investors or retail traders who tend to look more at FX. We've only got a bit of data here. Let me just have a quick look at Brent, because I think we haven't got that much data on that one either. So let's go back to here. So since the summer of last year, oil has gone from 40 $2 a barrel to wherever we're trading now, $66 a barrel. So we've seen a 50% run up in the price of oil. And there's just been a real appetite to be a buyer, you know, and what's interesting now, we are back up at these highs. So these highs from about a month ago, actually not a month ago, 2 or 3 weeks ago. So I think, again, it's interesting up here, the price of oil, you know, we're back at an area, $66.50 a barrel. There's been a real problem in the past. So there's an argument in the short term for it to run out of steam. There was another trend reversal last week, which again I would have missed. So it does question my approach to trend reversals, you know, where it broke out of the trend beginning of this week here, bang, at 63.5, and it hasn't looked back. You know, we've not had the sort of chop that I would expect, you know, so we've broken out this trend and we're trading up here. So $66.50 is the big one. You know, personally, I think $70 is the next logical target for oil. The trend from the summer is still very much intact. Any weakness brings the buyers back out. Maybe we'll have a bit of weakness up here. You know, we're looking very on the RSI, very, very overbought, not surprisingly, after the sort of run we've had, you know, this week, where it's already put on $3 for the week. So not surprisingly, a bit overbought. So maybe a bit of weakness up here, but the bias for oil is still definitely up. You know, and if we do sell off, we've got so many support levels. You know, the big ones from back here, just below 62, really big support ahead of 60. So many big levels to watch on oil. So I do think it's an interesting market, but it is pretty volatile. You know, as usual, you need to do sensible things like with stop losses and all that sort of stuff. So I think we'll start wrapping things up. But the immediately interesting one to watch is pound against the dollar. Oh, look, it is selling off after this break, because we have had quite a bit of a run, but on the hourly charts, 42.50 has been the problem. So if it was going to run out of steam anywhere, you know, it traded this morning about 42.20ish. If it was going to run out of steam anywhere, this was the place. So maybe we get another squeeze up and some weakness, but we do have those Fed minutes tonight. Stock markets, because they are so volatile at the moment, you know, but directionless, a bit like headless chickens, pretty directionless, but plenty to keep an eye on, I think, over the days ahead. But for me, maybe the pound is the more interesting one. And the bigger picture currency pair one is that dollar yen, to see, you know, are we seeing on the daily charts on dollar yen, you know, something of, where's the daily chart gone? Hold on a sec. Something of a bigger turnaround in the fate of the dollar versus the Japanese yen. Okay, so I think there's a few different time frames and things to watch there. We will start wrapping things up as usual. Let me just put my oil inventories. Of course, Wednesday is oil inventory day, so that's every week we get the oil inventories at 3:30ish, I think, on a Wednesday, where the US says how much oil it's got stockpiled or something. So we can often see quite a lot of volatility on a Wednesday afternoon for oil. So we'll see what happens. We'll start wrapping things up there, but any questions, drop me an email to david@tradeafter.com. You can follow me on Twitter for sort of charts and stuff during the week, and I'm at Jones the Markets, and you'll get sent automatically a link to the recording if there's anything you want to watch again. I think that'll be available in about half an hour, and you get sent a link probably this evening. But we'll wrap things up there. Thanks for coming along, and we will do it all again next Wednesday. Okay, thanks very much.